I said my prediction for the Nasdaq is it's going to fall to around 500. Right now, about 1,700. Got a long way to go down. The Dow Jones still above 10,000. Probably going to fall to between 2,000 and 4,000, but it might go below 2,000.
What is the worst-case scenario for our markets then?
Our markets are going lower. This is not just a financial crisis. This is an economic collapse. Our entire phony economy is collapsing around us. There's nothing the government can do to stop it. They should get out of the way and let it happen.
Bottom, bouncing off that bottom, 8,000, plus the general market rise today. It was a pretty darn good day. Is this going to be a bull market? It may be a bull and a bear, but do you think it's a bull market? Are you buying? Would you recommend buying? Is now the time to bottom fish, my friend?
Well, I'm still buying stocks. I've been buying stocks for a decade, but I still think the U.S. economy is in trouble, and I don't think the current environment is going to be bullish for U.S. stocks. But I don't think the strength in the U.S. stock market right now means anything with respect to a future economic recovery. I think the market is rising simply because, A, it fell dramatically, and markets don't go in a straight line. You're always going to have rallies in bear markets, and I think we're experiencing a bear market rally. And, of course, if you put our rally in context, look at what's happening outside the United States. The U.S. is the worst performing market in the world, and it's the worst performing market for a reason.
And Peter Schiff is our big perma bear. He wrote Crash Proof, How to Profit from the Coming Collapse. All right, let's start with Sean O'Hara, because I think he agrees with me, and I'm going to stack the deck. Sean, I say the recession is dead. Will you second that emotion?
I'm not sure that I'll second that emotion, but I will tell you that I think it's time to start thinking a little bit more bullishly about stocks. I think what you need some kind of an impetus to get stock prices moving. And if you look at the amount of money that's in cash as it represents a percentage of the market cap of the S&P 500, it peaked at 60% back in this recent cycle. That really is just an unbelievable indication of how fearful people were. That money is starting to move back. It went from 60 to 48 back in February and March. It drove up stock prices around 30%. That average, if it goes back to normal, goes back down to the mid-teens, 12, 13, 14%. Right. And if that happens, as these folks sit around and they start to see some good signs, or they get bored with not making any return, or they get jealous of their neighbor who's put their money in and starting to make money, that money will come back in, and we believe it'll push stock prices back up.
Yeah, Peter Schiff, we looked at all these numbers. I just ran through them all. But we just showed a chart that showed you that since the March lows, 4 major indexes are up like 30, 40%. And at some point, how I feel about my portfolio, like 29%, 45% for the Nasdaq, at some point, couldn't that overwhelm a whole bunch of detailed durable goods numbers and all that other stuff?
Now, I think the good news is your record of inaccurate forecasting looks like it's going to be safe. I hear there's so much talk about green shoots on CNBC. It's like I'm watching the gardening channel. But the reality is, if those green shoots exist, right, we have trillions of dollars of stimulus. And just like the stimulus of Bush and Greenspan, you get an artificial boost. But it's going to fade, and this time it's going to fade a lot faster, and the hangover is going to be worse. The real problem is we're suffering from an overdose of government stimulus right now, and the more they artificially hype up the economy with cheap money and credit, the worse the recession is going to get.
Peter, how are we suffering? Don't you wish you'd been on the market rally when the S&P just rose 30 or 40%?
Well, wait a minute.
Peter, I take your point. I really do take your point. But a lot of our viewers are going to say, well, there goes Peter Schiff all over again. He's bound to be right in the very long term. And you are. There will be another crash and a bubble at some point in the future, and you will be right. Meanwhile, you've now, or certainly a lot of our viewers, may have missed out on the housing rally and the stock rally because they're listening to you.
Well, no. I'm not telling people not to be in the market. Quite the opposite. I'm telling people that stocks are going to go up. I've been saying that for years. I prefer foreign stocks to U.S. stocks, but I've been telling people for years if the choice is between putting your cash under your mattress or in the bank, buying bonds or buying U.S. stocks, buy U.S. stocks. I'm just not going to lie to myself about why the market is rallying, and I'm not going to pretend it means that the economy is good or that U.S. corporations are really more profitable. They're not. It is all an illusion created by the Fed, and it's going to end very badly. And it's not way off in the distant future. This is not a problem that's going to come back to bite us in 10 years or 20 years. This is looming on the horizon. I don't know if it's this year, next year, the year after, but it's going to be a horrific crisis, much worse than what we had in 2008.